before the storm hiking rates of major national banks. Bank of England, biggest interest rate rise in 33 years. On Friday, sterling marked the 30th anniversary of Black Wednesday, September 16, 1992, by falling below $1.14 for the first time since 1985. With prices rising 5 times faster than the UK central bank's 2% target and the pound falling almost daily, policymakers, led by Governor Andrew Bailey, are under pressure to step up the pace of monetary tightening. The BOE had planned to endorse so-called quantitative tightening, where bonds from the asset portfolio will be sold, but Truss's decision to borrow huge sums to head off a winter spike in energy costs has introduced an element of doubt. The hawks argue that tamping down on inflation is the top priority and that the BOE can't fall further behind the federal. They see the Truss energy cost freeze keeping prices more elevated into next year than the BOE is expecting. The Doves worry about the economy slipping into a protracted slump that will take the wind out of inflation. Some see the increase in natural gas and electricity prices weighing on activity of all kinds and the BOE moving toward cutting rates sooner than markets anticipate. A 75 basis point increase next week would be the biggest since 1989, when inflation was climbing rapidly following a consumer boom. Swiss National Bank, SNB, a strong Swiss franc. Surprisingly, 50 basis point hike in its benchmark rate to -0.25% in June was widely seen as indicative of a major shift in policy and proof of the central bank's desire to get interest rates back into positive territory. Since June, persistently heavy capital inflows have caused the franc to strengthen still further, and the euro to Swiss franc cross rate now seems to be very firmly established below parity. The SNB continues to make warning noises about excessive appreciation, and financial markets remain alert to a possible surprise burst of intervention, but increasingly the sense is that a strong franc is now officially welcomed as a means of helping to keep a lid on inflation. Thursday's announcement is likely to reaffirm a fundamental shift in SNB policy that now sees a strong Swiss franc as a key tool in securing price stability.